We are live for a edition of the Mike and Mario Show. Excited to be back and looking forward to talking about all the interesting events unfolding in real time. But before we do that, Mario, how you doing, my friend?
I'm doing well, Mike. Thank you. And you?
I'm doing excellent, man. Getting close to the weekend, of course. The weather's good here. It's extremely hot, but I'll take it any day rather than the cold winters. But yeah, making the best of it, man. Enjoying summer before it officially starts. But so let's jump right in, man. So hope everyone's doing well. Just plugged in. Definitely have your questions and everything ready for when we open up the Q&A part. But market conditions are continuing to tighten while the Fed and other central banks are also looking to tighten. And it's going to equal a complete calamity, in my opinion. But I don't think the central bankers believe that because they think they can bring this thing down. And I'm not sure how that's going to play out. But let's jump into some of the figures and numbers given to us. And so this is very alarming because, we see a lot of green on this chart here, and then we see some sudden red. But it says Philly Fed plunges into contraction for the first time since the event occurred 2 years ago. I'll just leave it at that. But, not surprising one bit because all of the business closures, layoffs, and all the numbers are coming back, very negative. It doesn't surprise me one bit, but contraction. Are you surprised whatsoever, Mario?
No, because this economy, not just in the U.S. but in the U.K. and the rest of Europe, it's has been mainly driven by government spending, and borrowing as well, consumer borrowing, government borrowing, and now with interest rates rising, we saw the mortgage rate in the U.S. Recently go to 6.28, I think.
Right.
It's probably dropped back a little bit right now, but yeah, and at the beginning of the year, I think the mortgage rate was below 3%. The 10-year yield was 1.5. Now it's 3.5.
Right.
It's gotten up as much as, today it's at 3.3. So a consumer credit-driven economy and also government spending economy, when the cost of credit goes up, people will start spending less. And also we're seeing the rising prices, which many people call inflation, but I call the consequence of over a decade of inflation. That's putting tightening a screw on spending by the consumer. We're seeing that in the UK here as well. I think discretionary spending, which is spending that you can do after you buy all the basic necessities and pay for your living, let's say utilities. That's come down like by a third in the UK. So I'm not surprised that all those surveys now are showing that business conditions are going down because consumers spend less.
Right.
Businesses don't have to produce as much.
Right. Very good point there. So just to highlight more about just the details of this. So, it's interesting for me when, the Federal Reserve now are the ones giving us these numbers, and they have been very, the numbers have never been this doom and gloom, but yet they're still putting it out there without even doing any doctoring or fudging the numbers, because they could easily have that this last little bar here in the green, and we would know they're lying. But then again, why are they okay with just letting this news come out this way? Because all the numbers are trending downwards, and so it doesn't help them one bit in this whole narrative of them being able to land this thing, because it's like,
I mean, you and I look at this Philly Fed, and the markets do.
Yeah.
So, but the general public have no idea what the Philly Fed index is. So
right.
Maybe that's why they don't have to lie about it. They just put it out in plain sight. Right. And the Philly Fed is a little bit like the University of Michigan number.
Right.
It's a number that the markets look at very closely for some reason, the Philly Fed. So it's significant. It's still a small drop. We'll have to see what the next survey brings, because you saw there before the big red drops, there was a little red and then it went green. But I have a feeling this is going to keep going red.
Right. I agree, especially as they look to tighten up on monetary policy, which has been counter to what the whole central bank policy scheme has been about, which requires compounding inflation in a sense. But here's a little glimpse of some of the numbers as well. We can also get to that chart. But June prices paid fell to 64.5 from 7.89. New orders fell to negative 12.4 from 22. Employment rose 28.1 from 25.5. Shipments fell. Delivery fell. Inventories fell. Prices received fell. So it's like, damn.
Yeah. The employment, I think some people are so hard up that they're taking any job they can. And I think that's doing well. Can we answer a question here from low blood pressure?
Yeah, go ahead. Let me see here. We jump right into it. Where's it at? Where's it at?
7:04 or 2:04 your time.
Okay, let me see. LBP question. There we go. Jump into it. Go ahead. What do you say?
Yeah, he's asking Mario, why hasn't the 10-year rate gone up after Powell increased by 75 basis points? Well, I spoke about that today in my video this morning. If you noticed, it was Monday and Tuesday, bond prices dropped and yields went up to like 3.5%. On the back of the expectation that he would do something like that. So in the markets, we have an old saying, you sell the rumor and you buy the fact. So they sold bonds. And then yesterday when the fact came out, they bought it back. And that's why yields are not up. The other reason low blood pressure is because the market now thinks that the Fed is going to be tough. So they don't see long-term rates or long-term inflation as a problem. So they'll buy back a little bit of the bonds. I see the 10-year yield right now is at 3.32. So it's down about 18 basis points since, from the high of the week prior to the FOMC. But this thing could move very quickly. We could see a short-term or mid-term rebound in bond prices and drop in yields, but I think the trend is still for higher yields.
Yeah. Great question, LBP. So the bond market, the lifeline of the global monetary system, all rates have been climbing higher, and it's putting pressure on all the heavily indebted nations more than anything, to where I was talking about how, because the Federal Reserve note being the global standard, will be the last of the dirty clothes in the basket to really be exposed for what it's worth. Because at this current moment, with interest rates around the globe already well past the 2% mandate that central banks put in place for themselves, the bond yields itself makes it pointless to hold, because they're already, basically non-performing instruments, because you're losing out no matter what. And so it just amazes me how this is able to continue on, to where people are talking about bonds as assets when they're liability that to me have already failed.
Well, it's a fallacy of the last 30 years of investing that bonds are safe, and a lot of the regulatory regime in the West for pensions and investment funds, they force people to stay in bonds and stocks as well, equities. I remember a few years ago, there's a Dutch pension fund that bought physical gold, and the regulator in Holland, in the Netherlands, told them to, no, you can't do that. You have to hold bonds, and unfortunately, I think a lot of people who have some kind of stake in pensions, be it for a local government or I don't know, whatever it may be in the U.S., North America, Europe, they're going to be their funds are going to be hit hard, because the managers are forced to own bonds, which is crazy.
Right.
Crazy.
And in fact, and over here in the U.S., I follow the pension system a little bit, and the current the lockdown, the closure of the economy. The Biden administration, when it came in, they made sure they provided several $billion for the heavily bothered states, which is Illinois, Chicago, New York. So they all got a nice little injection.
California as well.
Use to cut paper over some of those problems. But the returns of, I think, 7% or so, that was offered in returns for those pension programs. they've been underperforming well before
Yeah,
now. But I'm like,
yeah,
all this negative activity in the markets and buying yields is like wow, like
yeah. Well, some people ask, aren't the higher yields going to help the pensions because they can get more return now?
mm-hmm,
Technically, yes. But if they've been investing in bonds when they were at 1, 2, or even negative,
mm-hmm,
and now those bonds are falling in value and going
mm-hmm.
up in yields,
Yeah,
the value of their assets is dropping massively.
right.
And like I think big pension funds like CalPERS in
Cowper.
California.
Mm-hmm.
These people are if you ask them, "Oh, have you got any physical gold?" They'll laugh at you. You,
Right.
they're full of, up to here with treasuries and corporate bonds, and all losing value. Uh, and even the new people that get into the system, you
Uh-huh.
might think, oh, they're going to get 3, 4% instead of one, but they're going to use their funds to subsidize the older people, I think. So it's a disaster, I think.
Right. And speaking of which, while you were talking, I type in CalPERS just to see what's the most relevant news. And it says America's biggest public pension fund is slow walking corporate climate action report charges. And I'm thinking like, it's just the climate narrative will squeeze into everything as an excuse for them to, further tax or maneuver things or point the blame.
Mm,
And
it's just such a huge distraction, this climate thing. Uh,
right.
while their funds are evaporating because of higher rates, they're worried about the green or
The
what's it
green
called? E-
transition
or
as if
ESG.
right. And then here's this is all impromptu, but it says CalPERS board restores $99,000 pension for a CHP officer convicted of molest. Yeah. So it's like it's like, come on now. Like, but anyway, that's a headline in the news. But let's keep moving, man. Uh let's talk about the more slashing, more numbers contracting, ADP second quarter GDP forecast to zero, confirming a technical recession. So, according to the Fed's own numbers, it's confirmed, and this is just a headline from Zero Hedge. But like we're 0.9 was the figure, but then it came in at zero, and the question is like, is there wiggle room for it to go below zero? Like according to their own measurements, would be the
Well,
question for the next quarter. What was
they
that?
could they could revise it next week to depending. They make their forecast depending on the economic data. So
Yeah.
I don't know. I don't think we have too much data for the rest of the month. But if there are signs of slowdown, they will revise that to negative, and
Mm.
maybe that's going to be the excuse the Fed has to kind of pivot.
Mm-hmm.
A recession. How can you justify raising rates so much in a
Yeah.
recession?
The thing, no, there's just market conditions itself is tightening so fast. And so, like, I thought the whole point was to be accommodative. And so to continue to do that right now doesn't make sense. Like, none of this makes sense, but that just goes to me to show how literally everything is about this transition and setting some type of reset. But
Well,
Miles says, no holding back. How bad do you believe it will be? How bad will it get in the streets, especially Mario, who tries to be reserved? Can you see us starving and freezing? I'll let you answer that, Mario, because he want to call you out on
how bad can it get in the streets? I mean, it could get bad. I saw an article a week or two ago in the Daily Telegraph, which is a
that.
major newspaper here, and the guy wrote and said, Boris Johnson must be careful. We could see what happened in Sri Lanka happen in this country. And I'm not sure if people, yeah, I think people are already having a tough time feeding themselves here in the UK. The food banks are very busy. People giving food to people even people who work can't afford sometimes to feed themselves. And in the coming winter, a lot of people are going to be turning off the heating
Yeah,
and going to be wearing, layers to keep warm.
right.
I remember about 10 years ago uh, when I had my business, pawnbroking business for a while, and I used to take a bus sometimes to go home, and there was this older lady. She was always on the bus, and she told me, "Well, I've been at that supermarket. They have a cafe there, and I've been there all afternoon because I can read my book and it's warm,
Yeah.
and I don't have to heat my apartment." So people will get around it. Whether that will happen, I mean, maybe in the U.S. there's more chance of you getting riots, even
Yeah.
though we can get them here. And why is that? Because I don't think the welfare state is as prevalent in the U.S. And I'm not saying the welfare state is a
Yeah.
good thing.
Yeah.
Who knows?
No.
If inflation keeps going up and the currency becomes worthless.
Like, watch this. So, just to add my little 2 cents onto that question, especially in this country, as far as the welfare aspect of things, I want to say a good, 2/5 or definitely 1/5 of the population receives some type of government assistance. And so when the EBT card, the little food program card, don't swipe, or power outages or food not on the shelves because they're closing off the world with the ports and the railroads and the trucking, diesel prices through the roof. I'm seeing videos of trucks parked along the freeway because they can't get gas. And just to add to that, I did an interview with a guy from Sri Lanka who had given us a real world scenario of what's happening right now when the currency fails. The government's broke, currency's failing. He said pensions and retirements, all that stuff was cut in half when the currency got devalued and people are in the streets. And here's a little video clip to just show some anger by people in the streets of Sri Lanka. Like, this is a real situation. And
it's a little bit.
One time.
It's a little bit like reminds me a little bit of the yellow vest. About 3-4 years ago, it was getting this bad in France.
Right. So this is what's happening in Sri Lanka. So anything is possible. But yet it's quite predictable, in my opinion, because when society breaks down, our rule of law is usually up in the air, and hey, we go from there, man.
Yeah, the only thing I would say to that question is that the people in these countries like Sri Lanka, they haven't been as brainwashed into thinking that government is there to help you, and they're very there's a very thin line between accepting government and not. And I think in the West, that's the only thing the political class has going for it, because there's still a lot of people out there who are who think the whole reason for our economic problems are because of a guy in a country, a big country in Eastern Europe, a guy called Vladimir, and that it's all his fault.
Right.
So while in Sri Lanka, they don't give a hoot about Putin, and they just want their, there's corruption there too. A lot of the corruption comes to light when things like crises like that happen.
Yeah, very, very true. All right, let's keep moving right along. Let's get to just next more headline stories, man, to just further highlight how things are not in the best shape. But then we knew about this well before now. Let's talk a little bit about the ECB emergency meeting. And so that right there, I think, was was caught people by surprise. But it looks like due to the debt situation and the increase in bond yields globally, a lot of those indebted nations, I think the pigs, as they're referred to usually, are the most problematic. And so what do you think the response will be? Because I didn't get a chance to see what their solution would be. But
so they call it fragmentation, which is like a euphemism for you see Italy and Spain and Greece and Portugal and Ireland. They're up to here, and that maybe not Ireland so much. So we can actually call it pigs, like the animal now.
Pig,
Portugal, Italy, Greece, and Spain. Leave out Ireland maybe.
Yeah.
And Italian bond yields were racing ahead. They went from 3.4 last week, the 10-year, to 4.5 almost earlier this week.
Yeah.
And the ECB in their last normal meeting, I think it was last week, they announced they're going to start raising rates in July. but then
Mhm.
Italian bond yield, and they're going to stop QE, and then Italian bond yields, start zooming up. Greek bond yields, Portuguese, Spanish,
Mhm. Mhm.
and they have to come out and say, "Oh, yeah, we're going to be more tighter, but we're going to do everything to, like, we're going to print all the money to help those countries." So
Yeah.
it's a crazy situation, and eventually the whole European Monetary Union,
Mhm.
which is what really the euro is,
Yeah.
that's going to unravel, and I can see Italy going back to its own currency,
Yeah.
unless they want to just keep printing and printing and making things worse and worse.
Right.
Um, no, they don't cease to surprise me. These people,
Yeah.
and I think there was a German member of the ECB. Basically, she said what Draghi said in 2012, that
Mhm.
they would do whatever it takes to save these pigs.
Yeah.
So that's a pivot, in my opinion, even before they start tightening.
Right. That's a hell of a turn of pace because they're supposed to be dialing back, but yet the system requires more easing. So it doesn't make sense. And so here's just a quick glimpse at all the different 10-year bond yields. In Japan is 0.45. And look at the ratings.
Mm.
A, double A, triple A, triple B, triple A, triple A. I'm like, really like just how all this system, man. Like we got China debt 10-year, we got Portugal, Spain, this B double B, like yeah. So these are this is the value of debt.
The
And
thing is, there was a sovereign debt crisis, in
mhm,
2012, the
yeah,
pigs,
hmm
and they didn't really solve the problem. They just bailed them out, threw more money at it. But back then, their debt was like maybe a lot less than it's now. So
hmm
now it's even worse. So they didn't
right,
fix the problem. So they're just kicking the can down the road, and one day it's all going to blow up.
right. It's inevitable, man. We all knew that. And so, on another note, as a response to the ECB crises that's pending, I mentioned like when the house burns down and the land is cleared away and they start rebuilding, they're going to try to roll out, the digital euro. And just so this little headline here talks about they're going to put a cap of 1.5 trillion tokens, or your digital euros will be what the hard cap they will put on their new version of a currency there. And I'm thinking like, who in their right mind would think that they would put handcuffs on themselves by capping the currency creation on this side here? So, but
Yeah,
then
well,
again, they already got a plan for it, huh?
they could change the value of the token. They could, I guess, they could. I don't know. They could change the value of it. They
Mm-hmm.
could say that 1.5 trillion tokens is so much, so much. They could
Mm-hmm.
readjust, but it just goes to show that they want to go cashless
Mm-hmm.
and control you even more, the bankers. And yeah, that's, I don't know. I mean, they come out with a lot of this stuff,
Yeah.
digital.
But just to think, like, part of the plan is to go further into the digital transition. Like,
Mm,
that, because cash will become more valuable in the short term because they're going to try to, with the bank situations, and eventually they're going to have to, God forbid, bank bail ins. But when the banking crisis fully unfolds, then cash will be a threat. And so I
yeah,
can imagine them wanting to do something about that. And the digital version of a currency, a solely digital version, would be ideal. And of course, it's coming from the ECB, so it's that's the last line of the complete monetary enslavement when the central bank issues the currency directly, and you got a digital wallet with them.
I
But
think
that is
people
what it is.
need to be careful with bail-ins
Mm-hmm,
because I think the Bank of England came out recently
mm-hmm,
talking about bank stability, and they said the banking system is okay, but for some reason they said if there is another crisis, they're talking as if they're worried about another crisis. So, bail-ins, yeah, I guess in the US,
mm-hmm,
you'd technically be protected up to $250,000
mm-hmm,
FDIC. Here it's 85,000 pounds, and in the eurozone in Europe it's 100,000 euros. But if you have a systemic crisis and loads of banks are failing,
mm-hmm.
those those insurances could mean nothing.
Yeah.
So that's why you need to have stack, get your weight up outside the system.
Really. So here's an article from I think a week ago. This is probably
Yeah.
what you're referring to. The UK banks no longer too big to fail. That's like wow, like that's some type of admission right there. They're not going to bail them out if something happens. So they're going. What that
Yeah.
mean for depositors? Oh man.
Or
And so
does it mean that they're not worried that they're too big, or that they're just going to let them fail? So
right.
and why are they talking about this now?
Right, exactly, right now. And so, also, does this same type of message apply for the U.S. because they all in communication closely with each other? So, Can I just put USA banks no longer too big to fail? Says Federal Reserve,
Yeah.
On the same type of article. So, just more warnings, more signs of what's going on. Let's keep it moving. Yeah. So this is man. It's just things are unraveling in real time. And speaking of which, talking about what we did talk about was the Swiss National Bank. And so the Swiss National Bank, for the first time, it says in 15 years, 15 years they're raising rates, and it's still negative.
Yeah.
Oh man, this is. Let me find this real quick. So let me just pull this up here. So the Swiss National Bank, Swiss interest rate went from negative 0.75 to -0.25. They raised 50 basis points, but it's still negative.
Yeah. I can talk a little bit about this. The reason why Swiss rates are so low is that Switzerland actually fiscally is they've got very little debt, the national government, and the Swiss franc is seen as a pretty good fiat currency.
Yeah.
So they've had to keep their rates as low as the euro, or else the Swiss franc would have been so strong, it would have hurt like tourism and exports. But and so that's why they've kept it so low. But the Swiss National Bank as well, they've been the way they've been doing it. They've been doing QE. They've been buying like FANG stocks for the last, I don't know, 10 years or maybe a little less.
Facebook.
And now they're saying they're going to sell those stocks, and maybe they've had enough, and they're seeing they don't. Even my sister was telling me the other day that prices are starting to rise in Switzerland, so they're probably concerned about it.
Look at this, man. I just typed it in real quick. This is 2019, so this is probably outdated. Definitely outdated. But at that time, they owned 100 billion worth of U.S. stocks, and so I assume since then it's probably increased significantly. But yeah, like a central bank buying, putting their currency, or taxpayers or government's funds into U.S. companies and owning it as a part of their balance sheet. It's just that's not how this whole central bank was supposed to work, was it?
The Swiss National Bank, I've looked at it. It's partly owned by the Swiss cantons, which are the states, but it's also privately owned. You can buy shares in the stock exchange. The biggest shareholder is a German guy I never heard about. So it's like a private public bank.
Right, but they issue currency that the people use as their national currency. Like, so that's that's conflict of interest, criminality. That's all rolled in one. Here's a question here. It says, Mario, does English taxation authorities ask about foreign bank accounts, and are all Euro banking connected to Eurozone?
Foreign bank accounts? No, they don't ask about foreign bank accounts. And Euro banking connect. Well, in the UK, we have the pound, so we don't have a euro. The Eurozone are the countries that use the euro. So because in the European Union, there are a lot of countries like Sweden, Poland, and others that use their own currency. So yeah, it's a bit complicated. The European Union, not every country in the European Union uses the euro. So if you're in the Eurozone, it means that you are in the European Union and you use the euro. But Sweden is in the European Union, but they use the Swedish krona. So does Denmark. They use the Danish krona. I don't think the UK are as strict as in the US. It was Obama who passed that FACTA law.
Mhm.
I mean, foreign banks and brokers, they hate opening accounts for Americans now because there's so much, it's so strict, the rules. They
Yeah.
can the US government can, fine foreign banks for opening accounts for Americans and not telling them. No, they're
Yeah.
not as strict here. I think we are freer than the Americans in that sense.
Right. This when Obama, basically put pressure on Switzerland to disclose all U.S. That's when they were trying to crack down and keep eyes and ears on all the accounts outside of the United States to try to tap into some of those hidden funds. I remember, the accounts were canceled because back in the day I used to live in Switzerland, so I still had a bank account over there. So my UBS account, I got notified, I got canceled, and it was a headache, man. But yeah, I was pissed because I wanted to keep that account for as long as I
Yeah,
could.
because now I used to have an account in Switzerland because I lived there. I think it was a Credit Suisse, but
Uh-huh.
when I went there last time, I went into a local small bank where my sister and my brother-in-law have an account, and I asked the lady, "Can I open an account and give my sister's address for my address?" She said, "No, you have to live here."
Mhm.
But 20, 30 years ago, you could buy a post office box in Switzerland,
Mhm.
open an account, and use that as an address. Anyone could do it. And the
Yeah,
Swiss were they respected people's privacies, you
yeah.
see.
And
Uh,
that was an advantage of having access to that account at the time. So I was, yeah, it's unfortunate, but the crackdown, that was signs to me that the crackdown was beginning to where
it's
they wanted to
capital
know.
control, isn't it?
Right. They wanted to know everything. I'm like, man, like it's coming. So of course that was 9,
So,
13
so
years ago.
much, so much for the land of the free.
Right. And then speaking of which, just more of what's happening. We got this article here. China holds U.S. Treasury skid to 12-year low. And
Yeah.
so Tavi Costa put out a little visual aid that I'll probably grab in a second, but it's basically showing how
Mm.
it looks like definitely everybody's trying to get out of U.S. liabilities because either what's coming or they don't want to be stuck holding the bag at the end of the day.
A bit of both, and the Chinese, especially with all the talk about Taiwan.
Mm-hmm.
I think China has $3 trillion in foreign reserves. So could you imagine they freeze that?
Right.
That's. I think treasuries they have about $1 trillion. They have a bit less than Japan, but I'm not surprised. They're dishoarding. They're
Right.
even the Japanese are selling treasuries, I think.
Right. Last thing you want to be holding is somebody else's problems. Literally, you know what I'm saying?
Mm.
All right, let's keep moving right along. Let me see what else we got here. Yeah, more of the situation in Europe. Here we got European leaders back Ukraine's bid to apply for EU membership. What's going on with this, Mario? This is article that you sent me.
I haven't really followed this that much, and this is the first one I've seen.
Yeah.
But is that the article I sent you?
Yeah.
Actually, it didn't say that when I sent you. They must have changed the headline. I just saw that like all the major European leaders, Macron, Draghi,
Yeah.
they went to Kiev to see this guy Zelensky. I mean, this is just more and more provocation
Mm-hmm.
for the Russians. I don't personally I don't see the Ukraine ever joining the EU.
Mm-hmm.
I could be wrong, but I like the fact that this guy Zelensky is wearing like a t-shirt while
Like
Macron is wearing a suit. It's just to like pretend that they're
he's
things.
fighting, like he's on the front line.
Yeah,
Like, and I'm thinking, like, if you got all these leaders, so-called leaders, politicians heading to meet him in Ukraine, it's like,
yeah.
how much of a war zone is it for real? Like, wouldn't
I
that
know.
be a security threat? Like, if
I
Russia's
know.
bombing the hell out of
Yeah,
everywhere.
can you imagine World War II? Roosevelt and other guys coming to London to meet Churchill, while London's been bombed
Right.
by the Luftwaffe. I
Having
can't.
photo ops and photo ops and dinners and luncheons and in the midst of a war. Like, come on now. Like people don't really believe that as much, I'm sure. But anyway, it's what they're giving us, man. Let's keep moving. What else we got here? What is the crypto market? We got to touch on that for a minute. very prominent.
What's that? Sorry, crypto what?
The the drawdown in the crypto space, and a lot of that is just sell off pressure, margin calls, and price action. And so I've been covering that a lot lately. And a lot of people, even I tweet yesterday about the person saying about gold and silver, it's going to go down too. And I'm like, oh, it's going to be a big difference between digits going down on a screen and real metal going down, because it's going to be a disconnect, because that whatever you hold in your hand, you won't be able to get nowhere near what the price will be on that screen. You can bank on that, So, but it's all in good fun.
Yeah, there's also that Celsius network.
Right.
They had a bank run and they had to stop withdrawals.
Yeah.
Which is a shame, because the crypto blockchain was supposed to be an alternative to the fiat currency banking system, but they're having the same problems.
Right.
Unfortunately, greed always gets the best of everyone, even in something like Bitcoin and other things. And I know people will say, well, Bitcoin itself is pure, it's the exchanges, but it's all connected.
Yeah. I mean, it's it definitely. So tomorrow will be their little AMA. I'm sure it's going to be the most watched live stream of all time, because a lot of people are curious how tomorrow? So the sales. So every Friday, the president of the company has like an AMA, ask me anything type of situation, and so because he's been silent for the most part for this entire week since they decided to freeze the accounts.
Oh, okay, Celsius, yeah.
Right. So it's good to say tomorrow. Hopefully, there'll be some feedback provided. As of now, it's just frozen, and they're still paying interest on accounts. So
I see that Bitcoin is down about 7% on World Coin Index, just below 21,000. I think the low recently has been 20,000 exactly, hasn't it?
Yeah, and so let me look at this. So it's and I'm like, the bottom is nowhere near, because as the equities market continues to sell off, it's going to be a free fall. Everybody going to be trying to get liquid and selling everything. So, Bitcoin will definitely take a much harder hit. But yet, what type of action you think you'll see when it comes to the precious metals, given the fact the regulators and the financial oppressors don't want gold and silver to look like a backdoor out? So, can you see some severe selling in the precious metal space?
Well, today, for example, the Dow is down over 800 points. The NASDAQ is, NASDAQ is down 500 points, 4.5%. And we've got gold up $15 and silver up 21 cents. So I don't think the regulators can stop people buying physical. They can, they can tamp down the COMEX, like that guy from the CFTC said.
Yeah.
Back in January February, when there's the silver squeeze, he said, we had to tamp down the futures price. But they don't regulate physical gold and silver. When people buy from their dealers and local coin shops. So I think it's going to be very hard for them to do that. And I think the Fed is creating a lot of uncertainty in the financial markets.
Yeah.
And you're going to see a lot of volatility, and people are going to go towards things that are real. And that's why I believe in gold and silver and commodities doing well for the next few years still.
Right. I agree. We haven't seen nothing yet, because it's going to be a real shakeout of trying to distinguish between what's real and what's fake. And obviously what's been tested, tried, and proven will rise to the top.
These things don't happen over a week. They take time.
Right.
Right now, I admit, like the silver and the gold junior miners are getting hit hard, mainly because of this. It's like the analogy of throwing the baby out with the bathwater. They're getting hit, but I think eventually people will realize that it's good to have commodities just because they're real, and the value of financial and paper assets have been inflated so much that people are losing kind of the concept of what they're really worth.
Right.
But when you're holding one of these here,
Mario,
$half, you know what it is. It's a $half. It's real.
Right.
It's not like a book entry.
Right. Yeah, it's a big difference between computer code and the chemical composition of real world items, man. It's like no substitute for electrons and protons, that's for sure. All right, let's get into some Q&A, man. We're about that 40-minute part. Let's get some questions or thoughts and ideas. Feel free to put some things out there in the chat and highlight at Rethinking Dollars so to stand out, and we'll jump on it. So Mario, feel free to see if you see something, go ahead and ask or jump on it. ARC ETF is down almost 7% today. Yeah, that's all. I mean, that lady's.
Well, it's understandable because the Nasdaq is down almost 5%. So.
Yeah. So Phil, let me see here. Anything? So Phil, let me see. You go back in the thread a little bit. Dow Jones 800. I see it. That's ugly. Macron is Goldman Sachs. I don't see any questions or nothing jumping out.
Not yet. Yeah, guys.
Can Celsius survive?
I'll let you answer that.
So I'm hopeful. I'm hopeful and optimistic. So I must admit, as I mentioned the other day, I do have some funds in there. So I would definitely like to have them returned to me. Oh. So if it wouldn't belly up, I knew the risk. So it's one of the things, you just take some L's, but it comes with the territory. So I hope there is a way to resolve this to where people can get their funds. But no matter what, if they are able to get back, something, unravel some of the things they involved in, as soon as they open up accounts, people going to take it out. So the company going to go belly up. So I don't foresee them actually opening, but it is what it is. I hope they do.
To be honest, I had never heard of Celsius before this happened, so I don't have any funds with them.
They're pretty. I mean, it's been growing pretty big, and the business model has always been questionable, but it's become more of a question once the regulatory clarity came in, because once they made it so that your average Joe couldn't earn yield coming in, and everybody else was grandfathered in, that's when the model definitely changed to where I'm like, oh, it's not
a bit like a Ponzi, isn't it?
That's kind of what it boiled down to.
Futi 43 says, Jeff Berwick grafted me into buying Pirate Chain. Can't believe I fell for that. What's happened to Pirate Chain?
So Pirate Chain is a privacy coin.
I've heard of them. Isn't there another name for them?
R is ARRR is the
have they gone bust too?
It's not, but it's down severely just because it was probably more a pump and dump, and it pumped severely, which excited a lot of people. And then now it's 40 cents. And when it first came out, it got up to, I think, like $7 or $8 or no, $2. No, it got up a lot higher than this before.
Yeah.
But it says $2 here when it was first introduced, and now it's trending to 40%. But I my personal opinion, the tech itself, as far as what it was offered as a privacy coin, I think it's still solid. It's just right now, it's not.
I mean, I've always told my viewers, and because I covered cryptos a bit more years ago, and I said there isn't a problem with you putting some funds in there, but don't put. The thing is, it can move so much that if you put all of your eggs in that basket, you can get hurt really hard. And I think it still applies, and it applies also to like commodity stocks and miners. I still favor physical gold and silver, but if you're going to speculate in the miners and commodity stocks, you got to be prepared for a lot of volatility, even though I think there is more underlying value in commodities than in a lot of these altcoins. A lot of these altcoins are just like, during the dot-com bubble, you had anything with dot-com was worth something, and then there's no business behind it, right?
Right. And I think, so out of the 10,000, how many ever coins, once this market collapse occurs, it's going to shake out all the riffraff, and the ones that actually have utility will be utilized. And I think privacy coins, if it's legitimately private, they'll come back, because I think as more regulatory clarity unfolds, people are going to be looking for ways out of this current open source public ledger crap. And they're going to want...
Normal Norman has a question, but we'll answer this one first.
So it says if you won the Mega Millions or Powerball, which would be 80 million after tax, what would you do, Mike and Mario? Buy it, and would it be wise to save 80 million, and would it survive the hyperinflation? I don't play the lottery, but I do drive out a freeway and see the mega ball. It'd be 200, 300, 400. I'd be daydreaming. My imagination goes woo. And I'm like, man, I would make my public statement announcement basically saying, I'm getting rid of these things so fast. I'm gonna buy gold, silver, anything. I'd be making fun of how I would make a public announcement.
Yeah, I mean, here in the UK, we have the national lottery, and it can be more than that even when it rolls
Yeah.
over, and it's not taxable. By the way, there's no tax if you win the lottery here.
Really?
No, and
Oh my goodness.
yeah, let's say if I won £100 million, I would be worried. Not really worried, but I'd try to get as much physical gold and silver as possible, and then buy maybe properties to rent and stuff,
Yeah.
real things.
Yeah.
Buy some nice watches and wine. Yeah, try to get rid of as much of the cash as possible. And I would not make a public announcement if I didn't have to, because I wouldn't want people to know.
Yeah, exactly. Me too. And so, you know what? So watch this, just for those tuning in. Think about this. Whenever that question is put out there, what would you do if you were given a dollar sign? How everybody lights up, because your imagination goes wild. You get excited, and that's good for your body to get that sense of happiness.
Yeah. But I try not to change my life that much, because money like that is like. And the other thing you have to try to do is to put it into trust, so that your heirs wouldn't be paying too much tax. You have to think of that too.
But then here's the thing: like putting the real world assets into the trust would be the focal point, because to put it, because you can't really put it in a bank, because there's going to be
you buy like a golf course, a country.
Buy any and everything you can buy. You got to buy an island and put it.
Norm has a question for me. What are housing rates there now in the UK and the housing market? Well, mortgage rates are rising here too. I don't know exactly what they are, but they've risen quite a bit, and they follow more the Bank of England rate. And the Bank of England only raised rates by 25 basis points today.
Yeah.
But the housing market until recently was doing really well. We had a record average national house price, £279,000, the average house in the UK. But I expect it to slow down, hopefully not too fast, because we're trying to sell my mother-in-law's house because she's gone into a care home, and we need to finance that.
Yeah.
But so I think it's going to slow down as well. And I think rates, the Bank of England still seems to have control of longer term rates, the bond market, but I think they're starting to lose control. And we could see things accelerate lower in terms of the house prices.
Yeah, so I was trying to just find some numbers on the mortgage rates, but I couldn't. So I just came across this. It says homeowners face $135 a month mortgage rate rise after interest rate hike. So,
that's the average, you see. I mean,
I'm
sure some people won't face as much, and some will face quite a bit.
Yeah, there's no percentage out here that's given, top 10, 11%. So anyway, so
the mortgage market, the mortgage rates here aren't as it's not as publicized as in the US. You can get data on the 30-year mortgage very easily, but here it's probably gone up as well quite a bit.
Here's a question here. What do you think the backlash will be from the Italian people if and when the Social Security dies up in Italy, considering their population is quite old? Yeah, that's
Yeah, I mean, someone made a comment in one of my videos the other day that actually the Italian state is very indebted, but a lot of Italians have a lot of savings. Italians are one of the biggest savers in the world, actually. And there's no inheritance tax in Italy. So a lot of the elderly people own their own property. So I don't think it would be much of it could be more of a problem for people who aren't as well off. But generally, the Italians, I think, are okay.
Yeah.
But we'll have to see.
Just a quick glance at the Italian savings rate. So this is a graph that came up here. So Italy gross housing saving rate. So We had a little spike, and it's starting to trend back up now. So this is, on average, of course, but
Yeah.
interesting figures.
I mean, maybe Google the biggest country that saves the most. You might
Yeah.
find something that you.
Country with the biggest savings rate. Country with biggest savings.
Yeah, when I learned about that, I was surprised, but yeah, maybe not.
So here is this is probably a little older. I see something. Top 10 country with the highest rates of household savings. So I don't know how old this is.
Yeah.
2009. So here's the most recent one is from Investopedia, and it gives you 10 countries. And I'll pull this up here. So here's the 10 countries. It says 10 countries with the highest savings rate.
Yeah.
And one is Macau. It's a former Portuguese colony located on here. And then we got Republic of Congo.
It's a casino. Why don't we just go up? Oh, see Ireland. Forget about those islands.
Brunei, Singapore, Luxembourg, Gabon, UAE, China.
Yeah. So
China is the highest, 44.9 remaining of global standard. So okay, so Congo. It's surprising, but I wonder what the Anyway, keep it moving. So let's go. Let's a couple more questions, and then we'll dial back. Let me see here. Let me see what I see. A lot of thoughts out here. Here's one from S400. It says, when do you guys think the bank run will occur? Do you think people will get to see when the events of the FDIC not being able to ensure everyone in live time? What happens afterwards? Bank run. I think they thought out this transition quite well, and that's why I think the whole CBDC talk is starting to gain momentum. And they got 90 countries so far with getting ready to roll out their test trials or whatever, and I think 10 or so are already testing it. So I think the goal is to be prepared for that CBDC rollout if and when there's a banking event. And I think it'll probably play in with the cyber event that's still on the horizon, or the blackout, it's a power out, or whatever might come about. So it's going to be an excuse as to why the banks people can't log in, and ATMs are not longer.
Yeah, I think it would be tough for them to have bank runs now, because they would just shut the banks.
Right, and a lot of branches close over here.
Yeah, and they'll just freeze the. You won't be able to go online and maybe send some money to your local coin dealer to get your gold. They'll just freeze everything. I think and there will be a bail-in. Bail-in is the big risk.
Right, and the biggest how I think that the bank's servers might have some type of a cyber attack event on them. That's probably ideal, because we went through 3 or 4 different scenarios last year where they were testing this stuff out. So servers down, you can't log in, and whatever, error on the screen,
and they'll blame Putin for it.
Right, it'd be 100% a Putin event.
That guy is a clever guy, isn't he? He's behind everything.
He's notorious. He's right. And I'd imagine the media in Russia, I'm sure, is quite opposite than what we're getting here. So I wonder if they're painting, is if they're having issues internally over there, is it the Biden hike, or is it or whatever? I wonder what the narrative is over there, because they're selling propaganda as well within their own country.
Probably,
so what else we got here? It says, shoot. All right, so I see a lot of thoughts back and forth.
If we lose electricity, how can low blood pressure still use his Bitcoin? Well, he's got to remember the private key.
As long as you got your private key, and when the lights come back on, you can, and the ledger is on.
Will someone believe that private key is for real? If you want to exchange, if you
no, you would have to use your private key to then find a way to log into the blockchain to access your funds. So
I think if the internet goes down and stuff, it's going to be like Celsius. Everything's going to be frozen, right?
Yeah, it wouldn't be no much transaction. And last thing you're gonna be really concerned about is trying to get your cryptos off. Get them off to what? Where are you gonna take them? It's a
they're not physical, are they? So
right. You
can't really redeem it.
Right, 100%. So, all right, let's get ready to dial down. I see a lot of people talking about current market conditions. It's almost 3 o'clock over here.
So we've got the Dow is down 930 points right now.
Yeah, it's How low
can it go? Blood in the streets.
Right. Yeah, I don't think I'll be buying this dip. I ain't gonna buy. I wouldn't think about buying nothing in this digital paper Ponzi scheme world until we're in the transition into the next system, and the prices of metals are well defined as being the place you want to be. So anyway, all right, everybody. As always, it's been great connecting with you guys. Manico64, as well as Rethinking a Dollar, wherever you can find me. And yeah, have a great and blessed weekend. And we'll see you guys next week because it's going to be more action to talk about then, too. So continue to get your weight up, get your prayer, get your faith up, and do everything in between. And enjoy this weekend. Take some time off, unplug from the internet, and go break a sweat or something.
It's Father's Day, isn't it?
Good point. Yeah, I got dinner plans. I'll be poolside. So, all right, man. I will see you guys later. Be blessed, safe. Peace.